Today is June 10th, only 18 days left before the biggest trading event of the year, which I will have the honor of hosting. Today, I'm going to analyze in front of you some assets that I consider interesting, or at least provide explanations that I can give you about these assets. Before starting this video, I'd like to show you the SP 500 chart. For my most loyal subscribers, on April 4th, 2025, I shared a screenshot with you on my Telegram channel. You can look, you can check. In fact, I'll post it again today in the Telegram channel so you can see the before and after. And I had suggested that you keep an eye on the S&P 500, not to give investment advice. I don't give investment advice. You are responsible for your own actions in the markets, but it is indeed very interesting to buy the S&P 500, or at least to use an ETF, which is a very interesting financial instrument that allows you to replicate the curve of certain indices, certain stocks, and which outperform some physical investments in terms of percentage. As you can see, since April 2025, we have achieved a total performance of 57%. I personally invested 4 million in the ETF. It's transparent, as noted. You can calculate how much I generated. It's impressive, and the S&P 500 will keep rising long term. So when you have those investing in real estate, of course, you still need some for diversification, but only doing real estate is still complicated. Geographically, you're stuck in one place, and it's the same for taxes, plus you have problems with tenants and so on. You can see that it's much more interesting to invest in American indices that fundamentally just keep rising over the long term. And it's not over. I think we'll reach, and we will eventually reach 10,000, 20,000, and so on. You can see that my targets are already there. It's optimistic. For now, we're just waiting. But there you go. You can see it for yourself. Following that big drop on the S&P 500, which was a drop linked to a fundamental event, I suggested you buy the market. What happened? Prices exploded upward. Don't thank me. It was free advice. Now let's move on to USD. I'm going to clear all this up. What's happening right now with the euro dollar? So as you can see, it's not looking great. All of this is also fundamentally linked, of course, to the relationship between the United States and Europe in general, with everything that's going on. It's important to note that the euro was created to compete with the dollar and vice versa. So we have a gigantic range on the markets. So you can see it here with a level that marks the low point and a high point that's roughly here, each corresponding to round numbers. Obviously, these would need to be refined further. I'm drawing them quickly for you so the video flows smoothly. If we switch to the monthly chart, you can see here that we're stuck between these two zones. And we can see that this range has been lasting for quite some time now. Almost a year, actually. On the euro dollar, what I see in the short and medium term is indeed a downward trend. You can see it here. If we analyze the market structure, we have a high point, a second one here, and increasingly lower lows, one after another. Same thing here, a downward trend or even a channel that we could draw. So for anyone who might be, how should I put it, interested in selling, wait for a pullback like this, you can also see that it matches a key level on my volume profile, the volume profile that I use. Don't look for it on TradingView. You might actually have access to these tools soon. If we want to see a drastic drop in the price, we absolutely need to break through this level here, which corresponds to a round number. You can watch it. After that, we'll be targeting this lower level. It's the same if we want to buy. We look for a breakout from this range, and then we'll target higher levels. First this one, and then this one. USDJPY. So USDJPY, you should know that it's both uncorrelated and correlated. With several assets, it's a rebel, so it's quite complicated to establish correlations with other assets starting from USDJPY. But one thing remains absolutely certain. Can you clearly see it right here? We also have a range with a high point and a low point. It is obviously bullish. In contrast to the standard USD pair, which is currently normal, there is still a negative decorrelation observed here. So in this case, we will look to enter a buy position once this specific price level is broken. We'll look for a retest and aim for the highs. Same thing, we'll look to sell when this low point is broken. Then we'll target this level. And finally, the second one here towards the downside. So of course, to enter a position, you need more technical confirmation. But establishing a plan already allows you to find optimal entry points. On USD CAD, we can see it here. We are indeed also in a bullish trend. There was actually a buying trade to take here. Congratulations to everyone who entered. For now, it's the same as USDJPY. We'll wait for a break of the low to sell and a break of the high, this time to buy again. For now, caution, the trend is already established. Next, we'll move on to USDCHF. So, USDCHF. You can see here, I had already marked out this zone. It's bullish, but still interesting to look for buying opportunities. If we eventually get a pullback here, we'll target this first level for now. There is currently no selling pressure, so we don't break through this zone here. If, for now, the price remains this high, it is staying up there for a specific reason, so we'll only be looking for buy opportunities. EUR/USD is next, which is actually one of my absolute favorite currency pairs, as you can see here. We have a clear downtrend with several points of contact, showing a series of lower highs and consistent lower lows. However, be careful, do you see here? We had a false breakout attempt, at least we tried to break the trend, but it failed to gain any real momentum. So here, to identify a potential entry position, whether it's a sell or a buy, you'll need to carefully monitor for a specific confirmation signal on a lower time frame. You can see here, we have a range at the key level. There's a large liquidity zone on my volume profile, so it's absolutely necessary to break the low point. Here, the retest would be to go for the low point and vice versa. Break the high point, retest, and go for the high point. Regarding the NZJPY trade, a position I took and shared openly with you last week in a video lesson, I remained active in the position. I wanted to share it on my social media, by the way. Do you see it? A more than interesting ratio of 1 to 12. That means if you risk 1%, you earn 12% on a single position. If you risk 2%, you earn 24%. It's still very interesting. Of course, it doesn't happen every day, but it does happen. It works when you enter a position, when you have experience and confirmations. These are things that are possible. What do we have here? You see why I stayed in the position. We had flags. These are called flags. I entered the position here, then the flag was broken. A second one formed here. The structure kept going down, but now caution is needed. Exit your current trading positions right now, because a bullish structure is starting to form on the charts.